and I'm not seeing any pop-up. So with that, then I'm going to go ahead and make the transition to the financial planning topic of year-end tax planning. And I just want to take a moment and kind of circle back to one of the comments that Jim made about the connection between his presentation and my part of the presentation. And his information that he talked about, the economic outlook and the markets and how that all plays, that's great. It's a great backdrop for the things that I'm going to be talking about today. And as you could feel, Jim's at a much higher level at the economic outlook, whereas some of the most important work we do is taking that information and then bringing it down and giving it life in your individual financial plans. And so there's a couple of slides that Jim and I shared that you'll start to see the theme of how it works by taking that big global look first and then drilling down into the individual planning. So a typical or traditional way that people talk about year-end tax planning that I hear a lot out there when people are asking me questions about year-end tax planning is the focus of now or this year. And you do that by accelerating deductions and pushing income out as far as possible. So the notion is that you increase your deductions, anything that you can do to bring them into the current year, rob them from next year, so to speak, and income that you can push on out to next year instead of recording it this year, that you want to do that. And the focus that I hear people kind of talk about sometimes is I want to lower my tax bill now in the current year. And while in some situations that makes a lot of sense, in many it doesn't, and it's actually to an individual detriment. So my talk today is going to, what I'm planning on going over today is how we manage that. So the year-end tax planning, we need to have some sort of framing of how we decide which situation it makes sense to focus on now, or it might make sense for us to pay additional tax this year because it's a more advantageous year to do that, and especially given the fiscal cliff, we certainly want to take that into consideration. So I'll talk about our framing. I'm going to go through some information that is data related. I promise I won't bore you with too much of it, but they're just important pieces, and I'll just give you enough detail to make a few important points. And then lastly, I'll walk through a couple of examples just to highlight or illustrate the way we think and approach year-end tax planning. So the fiscal cliff, as Jim mentioned, it's a pretty scary thing, and here we are sitting and looking at it and wondering what to do. You saw this slide or this information a little bit earlier in the presentation, and Jim walked through that quite a bit. The first few items on this table really relate to the individual and the tax planning that we want to definitely be aware of. You can see towards the middle there we have some Affordable Care Act. I'll talk just a bit more in detail about those, and then the rest of the bottom half of this table talks a little bit more about spending cuts and other things that aren't necessarily related to individual planning. So one of the things that we've been talking a lot about as we're going through our year-end tax planning with our individual clients is, what do you think is going to happen? And so what we have is, I really like this table. It was put together pre-election, and so you can see that there's one column that is irrelevant at this point. Well, actually, 3 columns that are irrelevant at this point. But if you look at the third column, this one here, the Obama presidency and the split Congress, what is likely to happen? And so we can see that it's, there's a pretty good belief that those who earn $250,000 in income each year are likely going to face some tax increase. Those under the 250 are likely not going to be much affected by the income tax. Looks like the AMT, the Alternative Minimum Tax Credit patch that they typically do is going to be extended. We hope so. That would be a terrible thing to play into this year. Payroll tax, holiday, don't think that's going to happen. And then, of course, we've got the Affordable Care Act that does appear as though it's going to happen. So one thing that I want to just walk through, this is a very